Hello, everyone. Thank you for joining. We are going to give it just a few more moments to allow everyone to join before we get started. Thank you for your patience. We want to welcome everyone to MVP Real Estate's first Time Home Buyer Masterclass. We want to take a quick moment to congratulate you on taking the first steps to becoming a homeowner. So let me answer the million-dollar question. What did you sign up for and what will you be learning today? By the end of this masterclass, you will have a greater understanding of the ins and outs of the home buying process, from what it takes to get approved, what's the next steps are after the approval process, and how does the actual home buying process work? At the completion of the course, you'll be ready to take the next steps in becoming an MVP real estate home buyer. Before we jump into the masterclass, we want to introduce to you who we are. My name is Mark Williams. I have a career background in finance and management before getting into real estate. I am married to my lovely wife, Cindy, and we have a daughter, Marcella. A fun fact about me is I have a knack for retaining information, and I usually have the answer to any question.
And I'm Victor Castro. I speak Spanish and English, and I'm married to my wife, Rosie, who is our transaction coordinator at MVP Real Estate. And together, we have a daughter named Victoria Janae. Fun fact about me, I'm a drummer, and I've been playing since I was 5 years old. Together, we form MVP Real Estate. We help buyers and sellers with their real estate needs, and we specialize in helping first-time home buyers just like you. So now that we've set expectations and you learned a little bit about us, let's dive into it. Now is a good time to pick up a notepad and pen. I'll give everyone a few seconds. Unless you plan on purchasing a home in cash, you will need to obtain financing, also known as a mortgage. What are the requirements? There are 4 essential requirements needed, and they will determine the following. Do you qualify or not? It's okay if you don't immediately qualify. We can tailor a plan to have you qualify sooner. Trying to figure it out on your own will be very difficult and almost impossible. Applying individually or with someone can change your pre-approval. If you qualify, how much are you approved to buy and what are your limits? This will help us strategize together and set expectations before going to see homes. Knowing your qualified amount and scenario will help us avoid showing you homes you cannot afford to buy. And lastly, the program or programs you may be able to use for your financing. In other words, what type of loan or financing will you be able to use? This includes any sort of grants and or financial assistance programs available to you, if any. So, what are these 4 essential financial requirements? Your job history, your credit, your personal debts, and the money you will use for your down payment and closing costs. Let's go into detail into each requirement. As you take notes, make sure you envision your individual scenario. Job history. You need to maintain employment for a minimum of 2 years, preferably within the same profession. It's important to understand the structure of your pay. Are you full-time working 40 hours a week or part-time? Are you paid by the hour or on a salary? Do you own your own business or get paid commission? Do you work overtime? If so, how many hours a week do you work? Overtime and or bonuses are only included if you have recorded these earnings for 2 years. Any full-time or part-time job can be added as income as long as you have 2 full years on record. Example, if you were working part-time for 6 months out of the year, it won't be counted as additional income. Now let's jump into credit. A 580 credit score is the minimum score needed to qualify. However, a 660 credit score or higher is what we recommend. 2 reasons for this. Your interest rate will be positively impacted on your pre-approval, and you open the doors to more available programs, such as financial assistance programs if needed. The higher your credit score, the lower your interest rate. Be careful when applying collectively with others. What do we mean by this? To the surprise of many, if you're applying with a partner on your mortgage application, the lower credit score between you and your partner will be the main score on the application. Why? Here's a simple way of looking at it. Your credit score is a grade on how responsible you've been paying your debt and how much debt you currently have. Therefore, if your partner has a lower score, then it presents a higher risk to the bank you intend to borrow from. Your credit is ran during the pre-approval process. If your credit is not in good standing or would like to increase it, it is possible to adjust it by doing a rapid rescore. Our preferred lender, Cindy, will be able to tell you if this is an option for you once your credit has been run. She will also be able to explain the pros and cons of each program or financial assistance. Okay, so some of you may be wondering if there are ways to increase your credit. Well, we have 3 awesome tips that can help you increase your credit in an efficient way. Tip number 1, use your credit instead of using your debit card or paying in cash. You want to make sure you pay your balances down 80 to 100% of what you owe every month. Do this for things like grocery shopping or pumping gas. You want to make sure you avoid paying the minimum payment. Again, you want to pay at least 80% of your balance each month. Tip number 2, keep your balance on your credit cards at 30% of its total limit amount. Example, if your card's limit is $1,000, you want to keep the balance at $300 or less at all times. Tip number 3, you can be added to another person's credit account as an authorized user. This gives you access to the credit without being the primary account holder. Don't get carried away and start using your credit irresponsibly. Keep in mind the last 2 tips and apply them at all times.
Now I'm going to go over what types of personal debt can affect your pre-approval. The 4 most common personal debts are a car loan, credit card debt, personal or student loans, and unpaid taxes. If you have any of these types of personal debts, raise your hand. I'm going to raise mine too because almost everyone has at least one of these 4 debts. And I'm here to tell you that it's perfectly fine to have these debts and it's not a bad thing. So you are probably wondering why it is not a bad thing to have these debts. And almost every buyer we speak to thinks they need to pay off their debts before they can become homeowners. Well, I'm here to tell you, do not pay off your debts. This is one of the biggest mistakes we see buyers make, and in some cases, this mistake can decrease the amount of loan approval. Our trusted lender will advise you on what debts, if any, need to be paid off to maximize the amount you are qualified for. Write this down. It is not about how much debt you have, it is about how much you pay monthly. What matters to the lender for your pre-approval is how much you are required to pay monthly on your debts, also known as your minimum payments. The total amount is not that important. However, I am not telling you to go out there and max everything out. That will have a huge effect on your credit score, which we will cover later in the presentation. Let me give you an example of what I am talking about. Let's say you have a credit card balance of $10,000 with a monthly payment of $100. The $100 is what goes against you in qualifying for the loan. Now let's get into what is required for a down payment and closing costs. Give me a thumbs up in the chat if you have been told that you need 20% for a down payment in order to buy a house. Well, I'm here to tell you that is not true. You can buy a house with as little as 3% for a down payment. And yes, there are some assistance programs that may cover all of the costs. Usually for these programs, a 660 credit score or higher is required. But let me just pause. We are here to give you real-world examples. And the reality is these assistance programs are not the most beneficial and sometimes are challenging to get. The reality is, on average, clients come out of pocket between 5 and 10% total when buying their home. So what is the advantage of being a first-time home buyer? 1, as I mentioned, being able to take advantage of loan products that allow 3 or 5% down payment. 2, FHA loans, which are great for first-time buyers. And FHA loans only require 3.5% minimum down payment. Let me give you an example of how to calculate how much money will be required to buy a home. You can plug and play different home costs, so this will be a good calculation to write down. Here is the equation to write down. Cost of home times 7.5% equals money to close. So let's use this equation. We're going to buy a home for $600,000 and put 5% down. This will be $30,000 for your down payment. Next, there's something called closing costs. This consists of property tax, insurance, prepaid interest, loan costs, etc. A good rule of thumb is to calculate this at 2.5% of the purchase price. So 2.5% of $600,000 is $15,000. So in this scenario, you will need $45,000 to buy a home that costs $600,000. Now, don't let this number discourage you. If by chance you do not have $45,000, does not mean you are not ready to buy a home. This is where we come in as your realtors. During our one-on-one consultation, we will go over different options and strategies that are out there to help you with the money that is needed.
So now that we've covered the requirements needed to obtain financing, what will you need to provide as proof to meet the requirements? Copies of your IDs, both sides, such as a valid passport or a driver's license. Copies of your social security cards, both sides. Copy of your physical card with the signature. Copy of I-10 for those applying with I-10. A personal taxpayer identification number is issued by the Internal Revenue Service, also known as the IRS. The last 2 years' tax returns, W-2s or 1099s. The 2 most recent tax returns will be needed to verify your income. Pay stubs from the last 30 days. Documents showing an employee's earnings and deductions over the most recent pay period. The last 2 bank statement accounts. You must provide every single page, preferably in PDF format. Legible copies are a must during this process. All this documentation is what's needed to be provided for your pre-approval process. This concludes the financial requirements portion of the masterclass. However, we have a lot more to go over to ensure you understand the MVP buying process and what it looks like. But before we do that, we want to show you the proof that our process works. Here is the review from our clients Guillermo and Karina, who attended our in-person seminar covering the same information we are going over today. MVP Real Estate is highly professional, friendly, trustworthy, and dedicated. As first-time homebuyers, we were guided through the entire process by Victor, Mark, and Cindy. After attending a homebuyer seminar in Concord hosted by MVP, we felt confident in working with the team. MVP gave us the full attention, showing patience and ensuring we had competitive offers. Beyond their professional excellence, the team displayed genuine care for us as clients. We highly recommend MVP Real Estate for all your real estate needs. To follow up with their review, here is their client testimonial video that we received during their key day.
Hi, my name is Karina and this is my husband Guillermo. We attended the seminar with MVP Real Estate in November 2023. Before attending, I felt very nervous and didn't really know what to expect, but my husband Guillermo pushed me to go to the seminar to see what information we could learn.
Yeah, we didn't expect much. I told my wife that we should just give it a try and see what information we can learn. And I think after the end of the seminar, I think we both can agree that we had a really good feeling and we wanted to continue working with this team because we knew from the beginning that they were really knowledgeable and they knew what they were talking about.
And then after we spoke with Cindy, we spoke with Victor, we went through the pre-approval process with them, and it felt a lot smoother in terms of just getting the information that we needed because we just didn't really know what to expect. But with Victor and then Cindy was very helpful in terms of all the information that we needed. And then from there, now we're homeowners, so it was a very quick process from November seminar to now, February. It flew by for us.
We hope that you have found value in Karina and Guillermo's testimonial as much as we do. This is what MVP strives for in every transaction our clients experience. With Karina and Guillermo's permission, here is a little insight into their scenario and how they were able to purchase a home. Please note that these numbers have been altered for privacy reasons. So as you can see, together they had a combined yearly income of $160,000. Both met the minimum job history requirement as both of them were at their job for more than 2 full years. Both had credit scores that were above the recommended score of 660. Together, they had $85,000 to cover their down payment and closing costs. And Karina was able to pull out money from her 401k to be able to comfortably move forward. If you didn't know that was an option, now you know. And even though they had some debt, it was not enough to hinder their ability to purchase a home. To summarize it in a few words, we hope their review, testimonial, and case study has motivated you to take the next steps in the MVP home buying process. Over to you, Mark.
Now you have the knowledge of what it takes to get pre-approved, and you are one step closer to becoming an MVP home buyer. We want to go one step further. We are going to dive into what you can expect once you are approved and it's time to start searching for your future home. Writing an offer, getting it accepted, and becoming a first-time homeowner. We call this the flow of a real estate transaction. If you want to take notes, you can, but I would recommend just listening. I'm going to be giving you the quick version. If you miss something or something does not make sense, do not worry. We will go over this again after your pre-approval is completed. So let's start. Before a home is available on the market, the seller of the home needs to be in a signed contract with their real estate agent. And before you as a buyer can go see the home, you need to be in a buyer representation agreement with us as your agents. Also, before the buyer agreement is signed, you will already have been pre-approved by our trusted lender, Cindy. The listing agent then inputs the home into the MLS, which stands for Multiple Listing Service. Once this happens, the home will show up on apps you are familiar with like Zillow, Redfin, Realtor.com, etc. As your realtors, we here at MVP Real Estate are going to create an exclusive home search just for you. This search will automatically send you properties that fit your desired needs in your desired areas, as well as some recommendations from us. Once we locate the perfect home for you, we're going to write up an offer to send over to the seller's agent. The agent is going to present it to the seller, and we are going to get one of 3 answers: yes, no, or maybe. If the answer is yes, the seller has accepted your offer and we are now in contract. If the answer is no or maybe, some additional negotiating will have to take place in order to get your offer accepted. Congratulations, we are now in contract for your future home. Within the first 1 to 5 days, the initial steps of the transaction will start. The seller will be providing us reports and disclosures they have completed for the home. You, as the buyer, will need to send over a small portion of your down payment. This is called the EMD, which stands for earnest money deposit. Think of this as a handshake, confirming that you as a buyer are committed to moving forward with the purchase. Our trusted lender, Cindy, will now start the process of turning your pre-approval into an approved loan. We are now in the middle of the transaction. This is where we start completing something called our contingencies. Now, I know you're asking, Mark, what is a contingency? Well, let me tell you. Think of a contingency as a checkpoint. There are 3 major checkpoints we have to pass before we can cross the finish line. Checkpoint number 1 is completing inspections on the home. This is when we get professionals out to the home to inspect the condition of the property. The 3 most common inspections are a home inspection, which checks the functionality of the home and points out things that may need to be fixed. The next inspection is a pest inspection. This inspection checks for termites, mold, water damage, and items that deal with the safety of the home structure. The last inspection is a roof inspection, which checks the life expectancy and condition of the current roof. Checkpoint number 2 is the appraisal. This is when the lender hires an appraiser to go out to the home and give their evaluation of the value of the home. This is a buyer expense and is paid by the buyer up front. The third and final checkpoint is the loan approval. This is when our trusted lender, Cindy, gives us the thumbs up that you are approved for the loan and we can begin to close out the deal. If any of these 3 contingencies are not agreed on, then we may need to do some additional negotiating and come to a mutual agreement. Once that is done, the buyer and seller will sign off on the changes, and then you as the buyer will sign off on the completion of your contingencies. We are now at the final steps of closing the deal and getting to the finish line. This is called close of escrow. The seller is going to sign off on the transfer of title, also known as the grant deed. Next, you as the buyer are going to sign off on all the loan documents, required disclosures, and the new grant deed saying you are the new owner. You are then going to send over the remaining amount of your down payment if you haven't done so already. After that, the title company is going to email over the signed loan documents to Cindy, the lender, and her company is going to send over the loan money to the title company. Once all signatures are confirmed and all the money has been received, the title company is going to electronically contact the county to officially put the house in your name. I know this sounds like a lot, but this all takes place within 24 hours. Now, just like Guillermo and Karina, who you met earlier in the presentation, we get to celebrate and hand you the keys to your new home.
Now that you know what the entire buying process looks like and what to expect, what's next? We have a few steps for you to take. Number 1, please complete the questionnaire, which you should have in your email. It should allow our preferred lender, Cindy, to structure your individual scenario before having the initial consultation with her. Number 2, schedule your initial consultation. You will be contacted to book a 15 to 20-minute consultation to go over your personal scenario. Number 3, have the copy of your documents ready to submit with your application. Whether you took a picture of the list or wrote them down, we will forward you a list again via email just in case. And with that, we want to congratulate you for completing the MVP Masterclass. And with that, we say,
We look forward to winning with you.